on Yahoo Finance. So the last time we spoke was just about 8 or 9 months ago. You were telling me that supply, that demand looked very, very strong. You were very optimistic about the remainder of what we saw last year, also heading into this year. I'm curious, just with President Trump and the Trump administration now in the White House, does that at all change that demand dynamic?
At this point, no, it really doesn't. We had our first investor day in 5 years yesterday. We talked about what we see into the future. The government regulations that are there kind of feel like we're in a steady state pattern right now. So at this point, no, nothing new that we're aware of.
Speaking of the demand question, though, it's been interesting to hear from CEOs and executives, even at the likes of Microsoft, saying that the chip shortage is coming to an end. How does something like that impact your business?
When we look into this year, frankly, it's going to be a pretty strong year for semiconductors. You've got all of the demand that is originating from the AI investments that are occurring. That requires a lot of semiconductor content. And frankly, we supply the equipment that manufactures the chips. And so when we look into this year, it looks like a pretty good year, to be honest with you.
What does that demand more specifically look like then, Doug? The growth opportunity, how that compares to last year?
Yeah, no, we see growth in the things that we do. It's up mid-single digits relative to where the investment in wafer fab equipment looks to be trending this year. And that's investment that generates all of the leading edge chips in the industry. And so we're feeling really good about where things are trending right now.
In your conversations with customers, how do you drive them to upgrade when you offer new tools like the ones that you announced at your investor day? Because you could argue that once they have your existing tools and TSMC is able to utilize your tools to make the chips that their customers want from them, why would they spend the money to upgrade?
The need to continue to innovate with leading edge capability, higher performing chips is always there. And that's actually what a lot of our equipment enables. And frankly, that's what we see going on, right? All of our customers are moving to that next process node to get the next level of performance. AI is driving a lot of that right now, but the demand for semiconductors, broadly speaking, is actually...
The Street will continue to follow Nvidia through next week's market-moving earnings report. Wall Street continues to view Nvidia benefiting from the worldwide expansion of AI infrastructure, even after China-based DeepSeek upended the extremely optimistic AI thesis early this year. The point is highlighted by hyperscalers like Amazon and Meta's aggressive 2025 capital spending projections, which were disclosed during this earnings season. According to Kate L. Hillo, Chief Investment Officer of Russell Investments, investments in artificial intelligence will be made over the next few decades. That being said, there are indications that Nvidia's earnings release should be viewed with care. Data indicates that over the last 30 days, Nvidia's first quarter earnings per share, EPS trend, has slightly decreased. Additionally, it has been almost 60 days since the Street updated its 2025 EPS projections for Nvidia. Currently, Nvidia is also one of the most inexpensive AI stocks. Data indicates that Nvidia is trading at 32 times on a forward price to earnings, PE, multiple basis. The values of Marvell Technology and Broadcom are 41 and 35 times, respectively. ARM Holdings has a 76-minute clock. I wouldn't necessarily want to be Jensen Huang, the CEO of Nvidia, because, wow, other people are working on the same stuff, according to Microsoft co-founder Bill Gates. Ryan Meller, analyst at HSBC. Reiterated buy is the rating. Price target, reduced from 185 to 175. Our argument that the demand prognosis for AI GPUs is still strong is supported by the fact that most hyperscalers increased their 2025 capital expenditures by 4% to 26% during the earnings season, despite recent worries about the long-term demand implications of DeepSeek's reduced cost strategy. On the basis of lower NVL rack NVIDIA data center product assumptions, we are reducing our FY26 data center sales estimate by 11% to $209 billion. Nonetheless, our FY26 data center revenue projection is still 14% higher than the consensus of $184 billion. To determine whether there is scope for more growth, we think Nvidia is still under more pressure to generate higher second-half fiscal year momentum on the strength of its B300 GB300 roadmap. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Got a big inflection point coming next week when NVIDIA reports.
No, I think that's a couple of days.
No,
you know what they're going to say.
I think it's.
No, we don't.
I don't know. We don't know. I think it's.
We don't know
I
what
think
they're
it
going to
can
say.
be a catalyst.
We really don't know the magnitude of what a
we don't know if they can beat or miss, right?
Yeah. Well, I mean, it'd be a shocker probably if they missed, but the degree of the guide is going to be a pretty big determining factor. Speaking of, you have a new charitable trust, right? And you bought NVIDIA. You added 2 stocks to it. We'll talk about one later, but NVIDIA, welcome to the NVIDIA investing game.
Well, I think welcome to 6% weight in the S&P 500. I think that's a factor that should be important generally. We've made a decision not to own NVIDIA. We own Broadcom and have added to it at the firm. But for the trust, we thought a 6% weight in the S&P, being naked that stock is really a commitment, and that's a statement that we didn't feel we wanted to make right now. And so we added. We also think that the stock has been in a decline. It's recently come back, but it was an opportunity to take advantage of it at a price that was, off the high. And there's no question that with everybody spending $100 billion, we just heard in the last few weeks on artificial intelligence, a lot of that goes toward their chips, which are dominant. And
John Vin is an analyst with KeyBanc Capital Markets. Reiterated overweight rating. Price target, up from 180 to 190. Although we do think that production limitations are preventing more GB200 NVL server racks from being shipped, we think the following will more than make up for this. 1. We think that customers have been able to push out orders of GB200 NVL and backfill with HGX-based B200 servers with x86 head nodes due to the lower initial manufacturing yields. 2. We think that DeepSeek and the limited supply of Huawei's Ascend AI ASIC custom chip have caused a spike in demand for H20 GPUs from Chinese CSPs. And 3. We think that NVIDIA's customers, particularly communication service providers, are financing its inventory at EMS providers so successfully that NVIDIA's sell-in shipments to EMS are recorded as income. We are increasing our price target and projections as a result, and we think that NVIDIA's impressive performance should allay any worries that DeepSeek would jeopardize the near-term intensity of AI capital expenditures. Loop Capital employs Ananda Barua as an analyst. Reiterated buy is the rating. Target price 175 as stated. In the long run, we think that street numbers will stay low for the next 2 to 3 years because our work with customers and the NVIDIA build ecosystem indicates that NVIDIA GPUs will reach 10 million to 12 million as hyperscalers aim to raise their non-CPU compute percentage from about 10% to 50% plus in the upcoming years. Keep in mind that NVIDIA's pitch is accelerated compute plus Gen AI, meaning that it has 2 $1.0 trillion compute market possibilities over the next few years, both of which are still in their infancy. Vivek Arya works for Bank of America as an analyst. Reiterated buy is the rating. Target price 190 as stated. We anticipate a minor fourth quarter beat, but the Blackwell transfer, Hopper decreases, and China restrictions may provide challenges to the first quarter outlook. The stock might be erratic after the results, but we anticipate that as investors anticipate NVIDIA's top-tier new product pipeline, GB300, Rubin, and the company's full addressable market growth into robotics and quantum technologies at the forthcoming GTC presentation on March 17th, positive momentum will return. Mark Lipacis is an Evercore ISI analyst. Reiterated outperform is the rating. Target price 190 as stated. Customers of hyperscalers continue to choose NVIDIA as their platform of choice because of the strength of its software environment and the size of its development community, which puts it 5 to 10 years ahead of its competitors. The ecosystems of AMD and Amazon AWS rank much below 2 and 3. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
Large. Speaking of AI chips, you like software over that space. How big of a market event do you feel like this is leading up to next week?
Look, I think it will absolutely be important. The market is craving some forward guidance on, the outlook, especially with the introduction of these new AI models. And with the amount of concentration that you've had in the Magnificent Seven, the other chip makers, it is going to be important. But again, going back to that theme of the potential for the rally to really broaden out, I think investors would be well served looking elsewhere for upside opportunities.
In a recent program, Jeffrey Small of Arbor Financial stated that the recent decline in Nvidia's stock was a chance to buy. He thinks the second half of the year will witness a rise in Nvidia's earnings. It reached 115 today, It's a fantastic chance for everyone to participate. Since we can somewhat predict what will happen this year, I believe that if you are trading Nvidia stock, you are looking at the upside potential over an 18 to 24-month time frame. And when they are able to satisfy their chip demand, we know that things will start to pick up speed in the second half of the year. There is currently too much demand and insufficient supply. They want to make up for that in the second half of the year, and we will start to see a significant increase in revenues the following year compared to this one. However, they might surprise. Therefore, you should rely on this for the upcoming 24 months. Infuse Asset Management's Q4 2024 investor letter said the following about Nvidia. Since Nvidia powers more than 90% of AI workloads, and has a reasonable forward multiple, we still own some of the company. Even though the hyperscalers are aggressively attempting to cut costs through their own ASIC initiatives, this company is only growing in importance. Time and again, the moat that CUDA offers has been undervalued. Nvidia has a product that the top businesses in the world simply cannot get enough of, even though I don't think it has quite the upside as some of the other companies in the portfolio. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.